Hey, it's Wednesday, 18th of May. I haven't had a look at gold and silver for a while. If you've been following me for a while, you will know that I have a negative outlook for gold. I have had for a while. You'll know that my theory is that inflation will kill the price of gold rather than push it higher like some believe. And you'll also know that this double top was my sell signal. Bit confusing after the sell signal how we recovered from that trend line. It was a stronger recovery than I expected, but of course, eventually gold has gone lower as we had expected it would. Now, it broke an important support level around 1830, 1840 recently last week. We bounced back to that level this week so far. What's the high of the week? 1836. So that level really has held on the bounce, and we'll have another look at why that's a strong resistance level. But 1830, 1840 on the weekly chart, this is a weekly chart we're looking at now, is definitely a strong resistance level from the longer term Fibonacci level, the 23.6% fib at 1830, and from the 100-week moving average at 1840, and this upper trend line, this upward sloping trend line, I should say, which dates back to August 2021. So there's a lot of reasons why that's a very strong resistance level. And of course, selling there yesterday was a really nice trade if you managed to get that done. Now, on the daily chart as well, we definitely have resistance around the 1840 area. It's kind of odd, really. The 100 and the 500-day moving averages are converging. So that proved to be yet another reason why the 1830, 1840 area held yesterday. We really would need to see this market above 1855 for me to turn bullish in the very short term, not long term. I don't think that even if we do get a good recovery, we're going to get too far. 1885, 1895 for me would be the limit. But if we get through 1855, then we could jump that extra 30, 40 points. But for me, moves to the downside are expected. Let's go back to the weekly chart. Eventually, we should really be hitting sort of 1770, 1760. I know that's a way off for now, and it'll take us a while to get there, but that's my longer term view. Silver chart's a little bit harder to read, really. Been going sideways a lot. Certainly would have been very difficult to hold either a long or short position in this, especially if you had a trailing stop, because with these kind of moves here, would have been very difficult. Anyway, finally silver has broken lower, got close to the 200-week moving average, that red line down there on the weekly chart, bounced back off it. We now need to go back to the daily chart for silver to get a short-term view, and as you can see, the 23.6% fib at 2180, 2200 has been perfect resistance. That was my sell area yesterday. If you're a subscriber, you will have already had that on your sheet. We've held that, we've pulled back a less than positive candle, this one following the two big green candles, the spike higher and the unchanged close, a little bit more negative, and we are in a bear trend, so that 23.6% fib is holding at the moment. We get up through 2210, 2220, however, we can then push up to the next target, which will be the 2260, 2270 area. Not the strongest resistance, to be fair. We could actually even get up as far as 2300, which was a good sell area previously. Anyway, we'll examine that if we get up towards that level. But for now, gold and silver do look like they're in negative trends to me.